Good morning, good morning, good morning. How is everybody doing? Everyone had a good weekend? Good stuff. Good stuff. For those who are on, on YouTube, can you just let me know if you can hear me? All good. Are we all good? Are we all good? So slight change of proceedings this time, because as you know, I'll normally play music in the background, right? I'll normally play music in the background because I can't trade. I cannot trade without music, guys. It's just something about it. It's just weird. Otherwise, I'm just sat here in silence. I just don't like it. I'd go insane, right? I'd go insane. So I have my AirPods in, listening to music. So apologies for that, because I got an email and notifications from YouTube saying, "Can you please stop playing copyright hip hop music?" So I thought I'd better listen. I wasn't going to get into trouble. So I have some hip hop playing in my ear. So if I randomly burst out in a rap, in just some random rap, then you understand the reasons why. All right, you understand why. If I start doing an Eminem spiel, you'll know why. All right. So how are we all doing? We have good weekends, restful. We get some studying in. What's everyone been up to? Did it. All right, I can hide that. I can put that over there. Get over there. Sorting out my screens, guys. Right. Interesting morning. Those of you who are inside Red Pill, we obviously bagged. We did very, very well last week. And it was asked of me, what's my bias going into today? What do I think going into today's session? Well, and this was asked yesterday, so this was asked on Sunday. And my view has always been the same, right? My view has always been the same. And I'm bullish until proven otherwise, right? I'm bullish until proven otherwise. Okay? We got to remember, this is a game of probabilities, okay? It's never going to be cut black and white whether the market goes in one direction or not. All we have to do to form directional bias is stack as many probabilities in our favor in terms of directional draws, right? And understand how price delivers. Well, for me personally, and for those who are inside Red Pill, when we were absolutely cashing in last week, we're looking at, personally for me, the broadening formation. If you don't know what the broadening formation is, I am going to be putting in something inside of the Red Pill University, which is obviously inside the Red Pill server, which breaks down my broadening formation. But it's something I've obviously backtested to death, and this is it on the higher time frame. You obviously have it on all time frames because, as we know, price is fractal, but it's seen here on the higher time frame. Okay, and this is a classic broadening formation. And again, if you are unfamiliar with the broadening formation, just bear with me for a moment. But we're looking at the balanced price range inside this broadening formation to use as support. Okay, and all of last week we spent the majority of it accumulating long positions inside of that BPR. We also had this BISI on the daily that we were inside of. Therefore, my net position has always been long. And this is why we were capitalizing so well last week, and how we were bagging so much is because whenever price came back, and these yellow lines delineate the BPR on the daily. All right, for those of you who don't know my charts or you're dropping in for the first time, this is my daily chart, this is my hourly chart, this is my execution chart. So this is 15 down to 1 daily and then the hourly. They're the only time frames I use. So these yellow lines indicate the BPR, and every time price came back into the BPR, it was accumulating long positions. Okay, and it's just accumulation, moved higher, came back to the sell side, moved off, came back, accumulated, moved off, came back, accumulated, moved off. So this has just been mass accumulation. So yesterday, when it was asked of me, where do I see price heading into today? Well, I was saying if this can hold going through Asia, then I would anticipate bullish price today. Okay, bullish price. And what have we seen? We've seen aggressive price action during Asia and London. And I've just missed out on my entry by literally 1 tick. My entry was 41.50. You bastard. Oh, gonna get done for swearing now. So I was gonna re-add in at 53. I'm looking. I want to see price come and take out the Asia lows. We've just created more relative equal lows, so I'm looking for price to come run these lows, dip into this this BISI on the hourly. But this is classic bullish price action after leaving a period of consolidation, right? Accumulation inside of this BPR, clearly seen on the hourly. Now we're expanding higher. I'd anticipate us running these highs, so Thursday high, Friday high, and my draw on liquidity is going to be up here at 41.72. This is where I'm targeting today. This is where I'd like to see price draw up into. I'm obviously expecting a retracement to come and take out the London lows, and then I'll be looking for a price to continue expanding higher going into the New York AM session preferably, right? But the reason why I have 41.72 is for a number of reasons. So we can firstly, look at the daily. And the daily, it would put us into consequential encroachment of this SIBI, which happens to tie into the BPR that we have at the high as well. Okay, so this is consequential encroachment, which would take out Thursday and Friday high, right? CE of the daily SIBI, right? We also have 2 times standard deviation from the swing low. Okay, and for those of you who now know how I use standard deviation, I use the body to body on anything 15 plus, and so 2 times standard deviation takes us to 41.72. Okay, so now we're starting to build up confluences as to why price is likely to reach up into that level. All right. What else do we have at 41.72? We can jump into our new weekly opening gap chart. 41.72 is the low of this new weekly opening gap. So we have a number of confluences as to why price would likely draw up there. Ultimately, to come and take out these liquidity that is pulled above these relative equal highs. So that is my draw today. For continuation higher, I do like to see price accumulate to move higher. Okay, that's pretty classic. What's your thoughts on the silver bullet setup? Yeah, absolutely. So there was a silver bullet this morning. I mean, I've traded the silver bullet for God knows how long, but yeah, the silver bullet's okay if that's if you want to build your strategy around that. I use it as part of a wider strategy. So if I've not been using it as quote unquote silver bullet, but it's definitely got preference. I know that Roma, who's inside our server, has been using that for a very, very long time, and I think he's got a 93% success rate using the silver bullet. So it's definitely good. But you sort of had it here, right? So between 3 and 4, Okay, this is looking to drive price higher, right, into this old fair value gap and purge this little SIBI, this little imbalance which we had up here. Okay, so that was the draw to come and take this liquidity which sat out above that. So you had it here, you had this old 15-minute volume imbalance which would have been your support that you could have taken it off. So if we just jump onto the 15-minute quickly, I like to keep 15 minutes, especially when they're in periods of consolidation like that. You can use them, you can reference back to them at a later date, and I used it today. You can see how price respected that 15-minute volume balance inside this fair value gap between 3 and 4 o'clock to get your 5 handles to run it up and take that high, running into that imbalance that we had here, this little SIBI on the 1 min, right? Okay, to come and fill in these volume balances. So yeah, I mean, it was there today. You could have taken your 5 handles there. Or you could have even looked into this to go short. I was looking at, but this is now after between 3 and 4. So yeah, I mean, look, there's setups. There's always going to be setups between 3 and 4. It's the London kill zone, right? So yeah, I mean, it's a good. I don't have anything against it. I like the silver bullet setup, But obviously you've got to know where the directional draw is, and that's half the battle. Otherwise, you're just playing the lottery, right? Anyone can say, well, there's a fair value gap. Let's take it. Let's trade it. But you need to know that the opportunity is there and it presents itself. So here is where I'm looking to see price run and take these lows. That's what I'm looking for. I want to see price run and take the London lows to take continuation higher. Let's have a look at the just to touch on the silver bullet very, very briefly. I mean, I was just looking at the video that he put out. He's predominantly using it on the 5 minute. I mean, the opportunity I've just showed you there was on the 1 minute, right? So it's slightly different. Which is my only thing with it. It's just like, you have to be a little bit flexible with it. This is technically our silver bullet, albeit it's not between 3 and 4. Return up into an OTE after taking the sell side. After prices run the buy side into that imbalance, which I just showed you before, to move low. I mean, this is on a This is the 5 minute chart, but this isn't in the 3 to 4 minute 3 to 4 window, right? So I think what it's good for is it's dialing you in to understanding how to utilize a fair value gap. I think that's where its benefit is. It dials your attention into using a fair value gap correctly. So you're looking for a fair value gap to form to drive price into a pool of liquidity. That's the same with any fair value gap. You take it any time. It's as long as the fair value gap is taken at the right time, then you can use that premise and that fair value gap premise at any time in the day. It doesn't necessarily need to be between 3 and 4. But I think the silver bullet, what it does is it dials you into that specific time window and to look for that specific setup. And I think that's what ICT was alluding to, is it's giving you something which is very, very simple in terms of time and price, so you can just dial in at that specific time. But for me personally, I will use a fair value gap whenever I want to use a fair value gap around any macro. So whether that's during a London kill zone, or whether that's during the New York AM session, whether that's the 11:30 when we're looking at retracements, when we've had serious expansion, whether that's 12:15 during lunch, whether that's the 1:30 hour, whether it's 2 o'clock, whether it's 3 o'clock, whether it's 3:15, whether it's 3:50. I don't care. I'll use the fair value gap if the opportunity presents itself, right? For me, if the market presents itself and there's enough range in the trade for me, I'll take the trade. It's as simple as that. But if you want to have it in your strategy where you're only looking for fair value gap entry to take 5-10 handles, then obviously you can use what's dubbed as a silver bullet to help dial you in. So this would have been a classic example of that, right? So right, between 3 and 4, I'm looking for a fair value gap to drive me up into a pool of liquidity. Okay, all right, let's do that, right? Okay, now you're actually specifically hunting something, between 3 and 4, I'm looking for a fair value gap to drive 5 handles. All right, I get it. Okay, I mean, you could use that at any point in the day, I might add, but you know, if you want to use that at between 3 and 4, it makes sense, right? Okay, so you know, we had this 15-minute fair value volume imbalance. We had a fair value gap. We're looking for price to drive higher for all the reasons I've previously mentioned in terms of price accumulating that BPR to come and drive and take this liquidity that's sat above here into this SIBI and volume imbalance, right? Okay, you could have even run it into Friday's close on the RTH levels, right? So these RTH levels. You see, you had a number of confluences where you could have used to drive price higher and expand it to take your 5 handles, okay? There you go. Fair value gap, 5 handles. So where we currently sit at this volume imbalance, still looking for us to drive lower. I want to see us take out the London lows. Who has seen? Oh, so the draw on liquidity is necessary in this. What about market structure shift? You don't necessarily need the market structure shift in the in this with the silver bullet V97. What you're looking for is a fair value gap to form that you can frame an entry off that is driving towards a pool of liquidity. So you can't take the entry without knowing where the directional draw is. So you need to know where price is leading to and drawing to, right? And then you're taking an entry in the fair value gap that forms in that window to drive price higher or lower into that pool of liquidity. That is what the silver bullet is. Okay, so what ICT is essentially saying is between those specific windows, which is 3 and 4, and in the PM session, and 3 and 4 in the AM session, and 10 and 11 in the New York AM session, is looking for a fair value gap to form inside that period to then look for price to draw into a liquidity pool. Well, this was the example on a 1-minute chart, right? You can look at the and here, you know, all of his were in the 5-minute between 3 and 4, right? So there's nothing clean within that you could have taken on the 5-minute. So if you specifically want to use the 5-minute, then today didn't present itself an opportunity. However, you could have dropped down to the 1-minute, and the 1-minute did provide you with an opportunity, right? Fair value gap, 15-minute volume imbalance is your support, looking to drive and take that high into that volume imbalance and SIBI on the 1-minute, which we discussed over here, right? And also running into the Friday low on the RTH level. So you had a reason to why price would draw up higher. Also taking out all of this liquidity which had been built up here, right? So you could have framed it like that. But you have to know where price is going. You have to know that price is drawing higher to fill that objective. So as we can see, price is moving lower, fuming. Lost my. I was gonna add in. So I've taken a trade already this morning. I took 3 contracts for about 4 handles or something. So that's my trade. That's my trade this morning. So just to talk through it briefly. I mean, I was in a 54.50, 54.75. Sorry. So for those of you who know, I have these orange lines on my chart, and don't worry, not even anyone in Red Pill knows what they are. It's something which I'm still back testing, but they're sort of my TradeX key levels. And so when price reached and fulfilled that objective and broke, I was looking at an OT entry inside of this leg here. So I was looking at this little bearish order block as my sort of line in the sand. I didn't want to see price break above that. So I took an entry short here with my stop above this high. And I was looking to drive down to take the lows. So I took partials off at 51.50, which was on the volume imbalance, right? Which was down here, and then I was holding the runners down to 49, but it obviously came back up on me by literally, I was sort of two ticks off where I wanted to stop, and it ran higher, so I got out at 52.75, and I was going to re-enter here at 54.75 or at 54.50, as you can see on this screenshot, but it didn't give me the opportunity. Fell just short. Anyone got any other questions? So this is where we just need to submit to time and price, right? Submit to time and price. You know, there's absolutely no need to jump in a trade now, right? I missed the opportunity to get in here, so by a tick. So I'm not going to chase it to where I would like it to go to in order to take a long, right? If we look at the hourly chart, we've created these relative equal lows, right? And we have this SIBI just below. So I want to see it run into this SIBI for longs, right? I want to see it take out the London low. Yeah, a price target would be, which should be interesting, is if we just draw a fib over this SIBI and we turn it into the quad fib. Right, these are the levels that I'll be looking inside of this SIBI for price to respect, and I'll be looking at the lower time frame to see what we have. Okay, so we have this BISI on the 1 minute, which hasn't been fully rebalanced yet. Okay, and what does that sit at? Sits at 41.49, which was my original exit, my original terminus on my trade short, right? So I'll be interested to see how price respects that level. What else do we have at 49.75? Well, we have the low of this new weekly opening gap. Okay, so we have a number of reasons why price would want to respect that level if we get down there. Okay. If price is very bullish, we would expect the upper quadrant of SIBIs to be respected. All right. And the same is true as if you're bearish. You'll be expecting the lower quadrant of SIBIs to be respected. Okay. In this instance, I'm bullish, so I'm looking for the upper quadrant of the SIBI to be respected. Or if it wants to run slightly lower, to come and take out this liquidity around equilibrium. Okay, if we jump onto the 15 minute and see what we have, which is the old bellwether chart, we have a 15-minute order block. So what is this currently doing? Who can tell me what this is currently doing at the moment? Anybody? Anybody tell me what is happening here? For those of you who, I don't know if anyone's from Red Pill here, but we're, this is cider, right? We're waiting for champagne. So what is happening here? Okay, if no one's got the answer, well, for me, this is just engineering liquidity. Okay, what I'll be looking for is for a smart money entry. Okay, so all of this, okay, it can be considered as engineering liquidity. I am looking for with buy side above, sell side below, right? Engineering liquidity. What you want to do is be a smart money investor or speculator, however you want to call it, and enter in with the smart money. So you're entering in the stops, and also when retail jump on it believing the market is moving lower, because all of that when they get their stops taken out is when market makers will be buying, right? So act script, accumulation, correct. And what do we have just below? Okay, what do we have below all of that accumulation on the 15-minute? Right, have an order block, don't we? So you can see how price respected that order block when it came down here, right? And as we know, the tip or the upper part of a wick is the most sensitive part of an order block. Okay? It's the most sensitive part of an order block. So if price is bullish, this is incredibly bullish sign. You know, if it's coming down just to the wick and bouncing off aggressively, this is a bullish sign, right? We can also expect, for me personally, because our job is to get in at the lowest possible risk, right? Lowest risk, highest probability entry. So if the market runs without me and it doesn't give me an entry, that is how the cookie crumbles sometimes. That is how the cookie crumbles. But I will certainly not be going long in a premium, and I will not be shorting in a discount, right? So for me, you know, if we just jump back briefly onto the 1 min, you know, I want to see a retracement to give me a safer entry long, right? I don't want to be entering in with engineered liquidity. I want to be entering in with smart money below all of the engineered liquidity, so where all of the sell stops are. So if someone's got to get out of a long, they've got to sell their position, right? So if you bought a long, you have to sell it. Who are they selling it to? Because you have to have, boosh, you have to have that synergy, right? You have to have that market match. You can't have one without the other. Someone's got to be selling to someone, someone's got to be buying off someone else, right? Never fucking forget that, right? You have to market match. It's not like I'll just buy 10 contracts off Jesus Christ, right? It's not, you know, I'll just buy it off, you know, TradingView, and they can just print as many of these little number contracts as they want. No, the market makers have in their own houses, they have their own contracts, obviously, which they distribute and sell. But you're ultimately buying off someone, whether that's Citadel, whether that's one of the other darknet pools, whatever it is, they're all owned by market makers. That's all you need to know, okay? So you're buying off somebody, or you're buying off retail. And as we know, market makers don't want to cannibalize themselves, right? They want to cannibalize retail's money. That is how this whole circus is funded, right? It's how the whole circus is funded, all right? They can't shoot the golden egg, though. And the golden egg that lays the goose is every speculator sitting at their desk in their home across the world, right? Consuming that money. So what they do is they allow them to win little, but they don't want them to win big. So they allow them to take these little fluctuations, but more times than not, they get it wrong over a longer period of time because they don't actually know what's going on. So this is engineering liquidity. This is engineering sell stops and buy stops, so that market makers can capitalize on that when they decide to move the market, cannibalizing all of those people who are in at the wrong place. Okay, so for me, I do not want to be getting in with engineered liquidity. I want to be getting in with the smart money, right? That's what we want to be doing, right? We want to be drinking the champagne. We don't want the cheap cider. We don't want the cheap stuff, right? We want to wait for the market makers to serve us the good stuff. So for me, I want to see price get down to this OB. It has come and tagged it once, fair enough, but it will create these relative equal lows. For me, I'd want to see that tagged. It could go, and if it goes, I won't trade it. It is what it is, you know. Good luck, market makers. You know, you got close, but you didn't get me. So if we just jump back onto the 15-minute again, we have this 15-minute volume imbalance. 15, it's definitely not a volume imbalance. It's a 15-minute OB, bullish OB, right? So I'd like to see price run into this OB again, take out this entity of liquidity for potential longs. What would that take us into? Well, it would take us into, ladies and gents, the upper quadrant of this SIBI on the 1 hour. The Kirk, it is the 230 candle. Kirk, I'm on YouTube, brother, if that makes any difference. God, I'm in Discord. I'm in the Red Pill Discord as well. So this OB, 2:30 in the morning candle on the 15-minute. Look at the 5-minute breakdown. Go down a little. Go down another step. We have a monster volume bounce on the 5-min right here. Which coincides with a 15-minute here. So again, if price wants to get up to this level, I'll be seeing how price respects it. Okay, I don't want to short it again personally. But we have a 5-minute volumer. And volume imbalance on the 5, and then we also have it on the 15 just above it, right? So 53.50. Bear that in your mind to see how price wants to respect that level. See if it wants to drive lower, come and take this before moving higher. Let's have a look at the SMT. So let's break down the SMT because this is really important. And this was framing why I was going long at 54.50 up here, right? I missed out by one bloody tick, right? One tick. And it's because of SMT. Now, let's look at this piece of price action here. On YM and ES, what do we have? Right, what do we have? Okay, we have divergence, right? We have YM and ES taking the highs. Taking the highs. But what was NQ doing? It was failing. Okay. What did ES then go and do? It went and took the lows, right? So ES then took the lows. YM took the lows. What did NQ do? It didn't take the lows. So there's two things here. We're getting price compression, but we're also have got in a position where NQ hasn't taken the highs or the lows. So what I was waiting for, and we're taking this high here, right? This high here, which is this high on ES, which is this high on YM. I was waiting for NQ to come and take this candle's high, which should put them all in confluence with one another, right? Now they have all taken their highs on the 305 candle. But what hasn't happened is NQ taking its low, right? NQ is now not taking its low, which is low as here. So now I'd anticipate price drawing down and NQ until NQ takes this low. Right? Can you not see that? All right, I'll do it again. So here we had ES and YM taking the highs. NQ failed. And then we had ES taking the lows, right? And we had YM taking the lows. But what was NQ doing? NQ was price compressing, right? And what I mean by price compressing is it hasn't taken a low or a high. Price is compressing before it expands. Okay, so when we have this, and now my OCD's flaring. Now you got me to zoom in. Now my OCD is properly flaring. I'm going to have to do this now. So you asked, now I'm going to have to do it. So it's your fault, right? It's your fault, folk. All right, it's this candle, isn't it? This candle. Right? So now, Chris Chendio, SMT doesn't mean anything, can't be predicted. Are you crazy? Are you crazy? Jeez Louise. Anyway, so we have this high and this high, okay? And NQ hasn't taken this low, its high. So when ES took its lows, YM took its lows, and NQ hasn't taken its lows, I'm expecting once NQ has taken its highs, now all of the market is in parity. And so when we're looking for price to drive, it's when the markets are all in synergy, right? And so now NQ has taken its high, ES has taken its high, YM has taken this high. Now what we're looking for, NQ to come take this low, right? Which is what I've just been saying all along. And what low is that equivalent to on ES? Well, ES has already taken this low. So I'm not interested in ES at this point. So if I was in a short, I would be short until NQ took this low. And if you haven't watched my SMT episode on YouTube, guys, I highly suggest you watch it, because the amount of people who have reached out to me and said that stuff should be illegal is unbelievable, all right? I frame so much off that. And there's 3 different ways I use SMT in that episode, so you need to watch it. But in one of those techniques is if I'm in a position and I'm waiting for the lagging indice to play catch up, I'll hold my trade until that indice has caught up. And what we're looking for and what we're now witnessing is NQ aggressively drive lower to come and take this low. Right? This is classic SMT. So if you are currently sat there saying SMT doesn't work, you just don't know how to use it. And that's just me being honest. All right. So now NQ has taken its lows. These have all now taken their low. Where does that leave us on ES? Well, ironically, are we not now coming down to that order block? Can you see how you can start building confluences together? Chris, are you crazy, bro? Look when I posted my SMT video, broski. I posted it about, I don't know, 2 months ago. So your point saying that I'm only talking about it because ICT made a video of it last week is just ludicrous. I made a video on YouTube earlier than that. See ya. See ya. Crazy. God, you button bashers. Just go and study, bro. Like, there's no point coming on like my YouTube and like, kicking off, bro. Just go and study. Go and, do something with your life. People, man. People. So, as expected and anticipated, where is price drawing to? It's drawing down to that order block that I mentioned, taking out this sell side liquidity. You don't study. Well, good luck to you, buddy. Did it. Just get rid of that guy. What a douchebag. What a little douchebag. So that OB would be considered as internal range liquidity. That OB, no, I mean, no, right, okay, let's break this down. So internal range liquidity is these lows. This is your internal range liquidity, right? You can, with internal range liquidity, what you're really talking about, Chris, you're a joker, bro. You're an absolute joker. Internal range liquidity can be spoken about in many various different ways. You can talk about it, but the best way is going from dealing range down, and that's how you want to. That's how you want to analyze internal range liquidity. So for me, I take daily ranges. So technically, if you were to look at a daily, this dealing range high, so this dealing range high, so this dealing range low, this in here is internal range liquidity. So these highs are internal range liquidity, but you can break that down. You can keep going further and further and further, right? So now, you know, this would be external range liquidity. This is external range liquidity, right? On the 1 minute chart, you'd obviously, this is time as fractal, so you could look at this on a 5 minute, 15 minute, whatever. But this high is now the external range liquidity, external range liquidity. Inside of that, so it's like playing Chinese dolls, right? Inside of that, you then have internal range liquidity. So this is an internal range high. This is an internal range low. Okay. So I'm looking for the internal range low to get tagged to run into that 15-minute order block, right? Which, as we know, is a position where market makers will reaccumulate to go long, right? So these lows are your internal range liquidity. This is internal range low. This is internal range high. That's external range liquidity. That's external range liquidity down here. And then you can just expand that out and out and out, right? So this is this high is external, internal. This is internal. That's external, right? And you just keep going out and out and out. And so when you're framing, like, you know, trade and trade bias, you know, you're looking for, you know, dealing range highs to be tagged as pools of liquidity. And the way you personally, for me, when I like to see price draw through external dealing range, so internal range liquidity for me can happen on any day, any trending day. But to get through external range liquidity, and specifically on the daily, I like to have a high impact news event which drives me through dealing ranges. So you need volatility to get through external range liquidity, but internal range liquidity is just the accumulation of sell stops and buy stops, and smart money is utilizing those to move price around. Does that answer your question, V97? Good stuff. 2 seconds, guys. Just need to go to the toilet. Alrighty. Actually, Chris, whoever, would you mind to go somewhere else, please? Thank you. It's okay, Chris. It's okay if you've got issues, bro. Like I don't mind like if people want to just come in this lobby and just kick off. Like I don't mind. Like you're people are hurting in this world. Like life isn't easy. Life's tough. So if it's easier for them just to kick off other people, then I get it. It's all good. They're obviously hurting. So me kicking them out isn't going to help them. It's just going to intensify their pain. So if you're hurting, Chris, and you're struggling with life and stuff, I got you, bro. That's all I want to say. I'm here for you. And if you still want to be a douche to me, that's entirely up to you, bro. That's entirely up to you. But I've just got love. So, if you need some love, you need some attention, I'm here for you, man. But if you want to keep kicking off, I've got nothing else to do but just ignore you. And that's not me being mean. It's just reality. Because I don't want to waste energy on that. All right. But just look after yourself, man. Just look after yourself. So let's have a look at the 15-min. For me, still not a safe entry to go long. I mean, this could continue higher. What I would say, guys, is if it doesn't provide an entry to go long, is I'll be looking at as a potential for the New York AM session reversal. Right, I'll be looking at a New York session reversal. Was my point about reaccumulate correct, though? Accumulate is a consolidation. So it depends where you're sitting in the buy side and the sell side of the curve, Chris. So, you can have reaccumulation as a period of consolidation, sure, but you can also have micro consolidation, which is just engineering liquidity, right? That has absolutely nothing to do with reaccumulation. So let's have a look at where we are. Again, this is just driving back up into engineered liquidityville. And I'm looking for price to move higher. And if in the AM session, the New York AM session, right, we finally hit our PD rate on the higher time frame. So for me personally, an area of interest, first and foremost, will be this 59. Okay, so I'll be looking to see how price respects this 59 level. Beyond that, I'm looking at 72. So 41.72 is my draw. That is what I'm looking for today. Right, 41.72. That's what I like. If price doesn't get up there, then so be it. But that is my draw today. That is what I'm looking for. I'm looking for a safe entry to get myself up to 72. The reason being is that we obviously have this new weekly opening gap to take out Thursday, Friday's high to draw us up into the daily consequential encroachment of the SIBI and also the BPR, following a week of accumulation inside of this BPR. So I'm looking for price to expand higher today. I'm just looking for low risk entries to go long. But price is quite evidently accumulating in this level. I just want a low risk entry. So for those of you who are just jumping in, I've already taken a trade this morning. This was my trade. So I got in at 54.75, drove it down to 51, took my run. I had a runner to go down to 49, which it still hasn't got down to, but it stopped me at 52. I wanted to get back in at 54.50, but it ran to 54.25, so I didn't get in by a tick. So I would have had two trades this morning, and that would have been me for the London session. Now I'm just patiently waiting. I'm just sat, right? I don't need to give any money back. I don't need to give anything back. I don't need to overtrade. I don't need to force an entry to drive this higher. If this runs and continues moving higher, then so be it. All right, so be it. I won't be on that train. I will not be on that train. It's departed the station without me, which is okay. I've missed many a train, and I've still got to a destination of success, right? So you don't need to catch every single train in the market to make a success of yourself, all right? Just got to have a very, very clear set of principles and rules and follow them and remain consistent. And you will eventually turn the corner. Just look at everyone's side red pill now getting their funded certificates. Guys, that is not by accident, right? That is not by accident. Let's have a look at the... See, what were we looking for on the SMT? What were we looking for, right? So we were looking for NQ to post the highs, to run low. Now they're all in confluence with one another, all right? I wanted a safer entry on NQ, right? Personally, you had this little BISI on the 5 min below this engineered and relative equal lows. This is where I wanted to go long, but ultimately it looks like price might just want to run off without me. And if that is the case, then so be it. Oh, Chris. You make me laugh, Chris. You make me laugh, bro. You make me laugh. It's so funny when someone's in pain. It's as clear as day, and then and then you live in denial, and you're just making it worse for yourself. You're just making it worse for yourself, right? Just be. What's the word? Be vulnerable. Like, if you're vulnerable, people will open up to you, bro. But if you're just have this really defensive attitude, it's not going to help you long term. If you're in pain, just be vulnerable and open up. You don't need to direct it at other people and then live in denial and say that you're not. It's you're living this false fallacy, this false reality, right? It's a sense of entitlement. You think that, you're better than everyone else. You think that, everything you say is right and everything else everyone else says is wrong. You're living in this created sense of entitlement that you built for yourself because your real life is so painful, right? But you spend so long in that fake reality that you've made yourself that you then believe it's true and you can't get out of it. So just try and be vulnerable, bro, and open up and just share your real feelings. Don't just try and be aggressive to everyone else. I'm not guessing at all. Ask anyone side red pill. I do this week in, week out, day in, day out, broski. Day in, day out. Day in, day out. Otherwise, you would just buy it for 72. I don't even know what that means. But so far, everything is going as anticipated, as planned. So if you want to learn how to tape read, then this is exactly what we're doing. It's a tape reading session, all right? I don't need to prove myself to anyone, Chris. That's the funny thing. You think I need to prove myself? This is the really funny thing. I just don't. I don't. Most YouTubers would get so angry when you just sit there and stress out and F and Jeff and call people out. It doesn't bother me, bro. I've made it in life. I genuinely don't care. I'm only doing this to help people. Literally, the only reason why I'm doing it is to help other people get there. And ask anyone who's inside Red Pill, who's succeeding, whether we're achieving those goals or not. If you're not, I don't care. I don't care. Leave. If I'm not for you, leave. It's completely cool. It's complete and utterly cool. I'm 100% fine with it. I'm 100% fine with it. I literally could not care less. I would happily sit here and just talk to AxScript and Oleg. Right? As long as there's one person who's prepared to learn and buckle down, that's all that matters, right? I don't need to prove anything to anyone. Literally nothing. I think that's the point, Chris. I think that's the real point. Like, I don't have to, and maybe someone, has to. You're desperate for a little bit of attention. Okay. As anticipated, price drawing higher. This level, 51, 54, 50 would be my lowest and my last opportunity for price to run lower. If it breaks over this, I'm expecting us to continue expanding higher. But guys, if you're inside Red Pill and you, over the weekend, you've managed to study the New York AM session reversal, then, it's got all the hallmarks for it, right? It has all the hallmarks for it. Okay, so we have expanded out from the Asian session low. The Asian session wasn't tagged during London. Okay, so just expanded continuously higher. During the London session, we have rebalanced this displacement leg, right? So if we just turn this back into the other fib. Okay, so we ran up back into an OT of this. So this leg here has now been rebalanced. Okay, so now what we're looking for is price to drive higher into a higher time frame PD array. Okay, so for me, I'll be we have an order block up here on the hourly, but for me, I'm looking at sort of 72 if we can get all the way up there, which is actually taking out all these highs. And once price gets up there, and if it gets up there for New York, which would be up in this area, right? Then we can look for a potential New York AM session reversal, which would be to drive the lows. We'd then be looking at a price target of equilibrium of the range, or if price is extremely heavy and wanting to show signs of continuation, we could look at the Asia low. But until that point, I am macro bullish until we get up and start taking out these pools of liquidity up here. Okay. Now, what we can look at as a secondary is this displacement leg, right? And if we go from low to high, what do we know that price is more likely to do? And as we know, this is a game of probabilities. It's not, we're never going to say, this is 300%, put your life savings on it. But, if price is above equilibrium of a premium range of a displacement leg, what is price more than likely to do? What are we anticipating price to do? What is it more than likely to do? It's more than likely to drive up and take the liquidity above the highs. That's what it's more than likely to do. Okay, it's less likely to come and take sell side when we are above equilibrium of a premium range of a displacement leg. It's more probable that it will run to take buy side liquidity. Okay, this is when we are searching for higher time frame targets. So if you have a displacement leg like this and you are above equilibrium of a premium range, it's more likely, I'm not saying that it will never happen, but it's more likely that price will run to take the buy side than it is to revert to come and take sell side. Okay, where's the sell side? Well, you have sell side all within this. But for me, it's more likely that price is looking to drive higher to take the pools of liquidity, the buy side, than it is to come back and start seeking sell side. All right. Good morning. I know the guy's obviously in pain, which is cool. Like, you know, that's his thing. If that's his thing, that's cool. I have no idea how you ban anyone on YouTube either. I wouldn't even. I don't even know how to ban anyone on YouTube. Right. Morning, Yazzie. So you've now got this displacement leg here. As I was mentioning, this is the last line in the sand for me for price to run down into this liquidity pool that we've built up down here. That 5-minute volume imbalance that we had marked out previously, right? It's now holding it as support. It's this 15-minute volume imbalance as well, which is below. So if we jump onto the 15, we have this 15-minute volume imbalance just above it. What do we know, guys, about 15-minute volume imbalances at swing highs? Who can tell me? support and resistance, right? Support and resistance. So in terms of news, what do we have for news coming up? We have Empire State Manufacturing Index at 8:30. Not something which I think is going to create a lot of volatility, but worth bearing in mind, it is a high impact news event. What do we have after that? We have FOMC member Kashkari speaks. Never heard of you, Kashkari. Pill speaks. MPC member Pill speaks. Hello. Now we're talking. Now we're talking. First name Red, by any chance, eh? But none of those really hold any relevance. It's just the news at 8:30. So if you have a look up here, what do we have here? We have an absolute monster amount of buy-side liquidity. And what sits just above that? A breaker. All right, breaker. Sorry, mitt. It's actually a breaker and a mitt. We have a breaker here and a mitt here, so kind of both. But it's a mitt. High, low, fell, swing, high, breakthrough, right? Mitigation block. And what do we know about mitties? Lines and sands, right? Coincides with the bearish order block on the hourly. So that's where I'll be looking to take first partials if I manage to get an entry long. Yeah, right now, we have to be asking ourselves the question: like, who is set to make gains at the minute? Like, who is net positive? And obviously it's anyone who's entering in down here is net positive. So I'm anticipating those positions to get pressured. Now we did pressure it here. Okay, so this can be utilized as that. But ultimately anyone who was long off this 15-minute OB is still strong in their position. Now, for me, I'd like to see price draw down to be able to get an entry long. You know, I wanted to see price dip below this relative equal low into the wick of the 15-minute order block. $49 was my level, right? 49, which is CE of this 15-minute order block. Didn't get it. Got 49.75. Missed out by 3 ticks. Missed out by a tick. Missed out by 3 ticks. You can see that. We can see my levels on my bloody chart. Let's catch up with Dixie, see what Dixie's doing. What the fuck is that? I'll be keeping my eye on 102.400 on Dixie. You know, when we can use old highs When we use old highs as classic support and resistance, we use them when they're inside of a SIBI or a BISI, right? So an inefficiency in price. So this old high we can reference as classic retail support and resistance because it's inside this large BISI, right? So I'll be keeping a very close eye on 102,400 for a bounce on a Dixie. That's where my eye is drawn to at the moment, which is essentially where that line is on my chart. See what SPX is doing. How it finished last week. So we've just got these two large RTH gaps that are on both sides, right? And this is the same on ES. They both exist. What other news do we have this week? Do we have any high impact news event this week? Yeah, we got an yeah. Okay, fair enough. Yeah, we got some high impact news events this week. We got retail sales on Tuesday. We've got the Bank of England, Bailey speaking on Wednesday. We've got unemployment claims on Thursday, and then we've got Fed Chair Powell speaking on Friday. So we've got quite a lot going on this week. What was I saying as a level for price to respect to draw lower? This is my line in the sand. If it's to draw down to give us a better entry. What's the question? How do you get your drawn liquidity for the day? ICT says get the weekly candle expansion and you get the bias for the whole week, but I don't know really how to do that. That's like the tip of the iceberg, V97. It's the tip of the iceberg. So, and on a very, very basic form, right? You want to start top down. So you want to start on the monthly. Okay, and understand and start marking off key levels, okay? Because price respects the levels on candles, right? And so we'll break those down. So what do we have? Here we have a monthly order block, bullish order blocks. You'd want to be marking off levels on this monthly order block on your chart, right? To see where we currently sit. So price has run down into and just below consequential encroachment medium threshold, of this order block on the monthly. Okay, so that's the first point of reference you'd want to know. Then on the weekly, you want to be looking at what is happening on the weekly. Well, we have another bullish order block. So you'd want to mark off the high, consequential encroachment of the wick, the low of this bullish order block, right? You know, so if you put across the weekly, what was price running down to on this week? It ran down to CE of the bullish order block week, right? So you'd want to have these levels on your chart, okay? What do we have going into this week? Well, this week we had this old BISI over here, and price was running down and filling in this BISI, but running lower and filling lower time frames on the target, on the daily, sorry. But what we have here to reference are the wicks. As we know, wicks are gaps, and so we can look at this wick on the previous day, right? And we can turn this into a quad fib. What did price run down to before bouncing off? 41.26. Okay, so this is on the weekly. So if price is bullish, okay, if you're expecting higher prices, what did I say about quadrants? The upper quadrant, if you're bullish, should be respected, right? Well, price has run down to the upper quadrant. So you'd be looking on lower time frames for PD arrays to take the market long. So we'll break this down. But just for reference, you'd want to have that on your chart, right? Okay, then you can jump down onto the daily. What do we have on the daily? Well, we know that these quads, this is the weekly, right? This is the weekly, last week's wick, okay? Today, we ran down to the upper quadrant before expanding higher, okay? You can do the same on the opposing side, right? So you can use this wick high. Okay, where are we on the weekly? Well, we're at 25%, the lower quadrant of the wick high of this week. Okay, so now you can jump down to the daily. I'm going to remove these because I eyeball these, right? But this is what, if you're learning, this is what you want to do. And then on the daily, you want to be looking at draws on liquidity for price to run up to based off that weekly chart. So are you expanding price? Are you expecting price to drive higher or lower? Well, for me, it's higher because we've spent 2 weeks in this order block. This week ran down into consequential encroachment of this wick. This candle took this low, and this week has started at the upper quadrant of this previous week. So I'm expecting price to expand higher. If we then dial down onto the daily chart, we know that we have BPR inside of broadening formation, and this was accumulation inside of the BPR, expecting prices to drive higher. So just on that alone, going from monthly down to daily, we can quite clearly pick out a draw on liquidity or a bias for the week, which is bullish. So it's bullish until proven otherwise. And for me, I'm bullish until this BPR cracks. So once this BPR cracks and price drives below it, which would be below equilibrium of the last week's wick, that's when I would expect price to start getting heavy, and then we can start looking at lower price targets. So for example, if we start breaking below this, and we can start looking with inside this, whether it's a lower 75% of this weekly wick, these would be price targets that you could be looking for price to draw towards. And then once you have a daily draw, and I do this every single day. I'm not predicting Friday on Monday, and I'm not predicting Monday on Sunday, right? Essentially every Asia session, I'm predicting the day's range. That's when I pick my draw on that's when I pick my draws on liquidity. And because the closing session of that previous day, you don't know where we're going to gap up. You don't know if we're going to gap down. You don't know where the new weekly opening gap is going to form. So every single day, I do my analysis to where I believe price is drawing to. And so today I'm bullish. I'm expecting price to drive high and look to take out Thursday, Friday's high. But that's where you are anticipating price to drive towards. And then what it comes down to is building that bias by using confluences on lower time frames. So where could price draw to on a lower time frame within inside that? And then if you're a neophyte trader, all you need to do is take 5 handles. Okay, so you just need to have an idea of where price is drawing to, and then you can use PD arrays on a lower time frame to pick your entries, right? Okay, so this is when we're looking at price moving from a premium to a discount. Well, if we go back to the other fib, so we already now know we're expecting price to drive higher. I was talking about this for pretty much all last week. We were inside of the OTE on Friday, accumulating inside of the daily BPR. So what we're expecting the price to do, we're looking for price to expand higher. Okay, we're looking for price to expand higher, and it hasn't stopped since. It hasn't stopped expanding. Right? It's just going. Okay, so now we're looking at potential draws and liquidity, and this is where experience comes into play and building and layering your understandings. Okay, but if you're just asking how do I pick draws on liquidity on a very top-down way, this is it, and I'm trying to keep it as understanding, so people understand it the best, as best as possible. But obviously, it's in depth. And you start layering this. It's like pancakes, right? You layer. The very high is looking at the monthly, weekly positions where we sit. But we can start looking at previous price action. So we have a 2-time standard deviation here at 41.72, and for me, that is a low-hanging fruit price objective off of an order block extension. 2-time standard deviation. Price ran down into a breaker block on the hourly, right? So we had the low, the high, the lower low, breakthrough. This is a breaker block. This was our bounce level last week on Friday, and we traded this. Okay, so price has already gone down into a breaker block. We've taken out the sell side liquidity. We've run into a breaker block. We're inside the daily BPR, which is these two yellow lines. That's the BPR on the daily. And this is an OTE of the previous displacement leg. Layering. Okay, so we're expecting bullish prices, right? So now we're looking for price to draw up to take these highs. Why? Because we're above equilibrium of the premium range. Price number one. Price is more likely to go and drive for buy side. Okay, we've already taken the sell side, so price is a reason to move into a higher time frame premium. We have 2 times standard deviation off this swing low, and we have all the pools of liquidity up here. Right, so they are my draws and liquidity. What else do we have as confluence? And then to really dial it in, I start looking at confluences. So what else do we have at those targets? Well, 41.72 is low of a new weekly opening gap. It's also the 2 times standard deviation. It's also 50% this rejection block. So even if price doesn't get up to that 2 times standard deviation, even if you got to 69.75, you'd be happy, right? So all of this is framing the context of why I'm expecting price to drive higher. Okay, and there's way more than that, but I'm just keeping it very, very simple for YouTube. Okay, so then when you're going into your lower time frame charts, all you're then doing is you're looking for low risk entries to go long, and you're not looking to get caught up in engineered liquidity. You're looking to enter in with the smart money, which is below and inside of sell stops. Where are the sell stops? Well, the sell stops are here. Right, the sell stops are here. So this is just accumulation. I'm expecting price to drive higher, but I was anticipating and looking for, and still am, a low risk entry to drive price higher. Okay, until we fulfill those objectives, at which point I'll then be looking for price to do what? Well, return it back into a discount, because price moves from a premium to a discount. Does that make sense, V97? You can start using SMT, you can always start using a whole host of things. But just to go back very, very briefly, that what you want to do, bollocks, that's the wrong. What you want to do is start on the monthly and start marking off key levels. Then drop onto the weekly, start marking off key levels. Look where you sit within that. Then jump onto your daily, start marking out your daily and leave your levels on there. And then you're looking for price on the lower time frame to how they respect those levels. Does that make sense? V97. Oh, what just happened there? That was weird. Axcrypt passing his second evaluation this morning. Hellfire. My guy. Well done, bro. So who's left? Who's still left to pass their evaluation? Right. So we got Kirk. We got Yaz. Galaxin. What else we got? We got loads. Okay, we got. It's frustrating because it doesn't show it in the lobby list inside the channel. It's only you can only see it inside when you type in the lobby. So that's Poe still needs. Emilio, Mustafa. All right. Bob, Big Babs, Buller, Crypto, Crywalker, D-Dub, Derek, DS, Eric, Ghost, Hazzy, Hyper, Iggy. Loads. Okay. Aight. Yaz, I'm pretty sure last week you were about like $200 away from passing yours. Like, surely you got to be close, broski. Am I getting confused? When do you think is a good time to start an evaluation? It's a good question. Do you feel like when you feel ready, like when you feel like you've consistently got a strategy that you're comfortable with, and if you're consistently profitable in a sim, then you're ready to go. You just the key is just to take it slow when you get there. It doesn't matter when, really, Yaz. In terms of a specific day, it doesn't matter. I'll probably say a Tuesday. Monday you want to get into the swing of things. Tuesday, that's when you're warmed up into the week again. You've got an idea on directional bias because you've had the previous day's trading. That's probably when I'd do it. Stuck in between that 5-minute volume balance and that key level, 54.75. For those who are in the Discord, I'll be in YouTube. I'll be in the Discord very, very soon. I'll be leaving YouTube very, very shortly. For those who are just jumping in, for those of you who are in YouTube, I normally listen to hip hop. YouTube have reached out and are not happy with me playing copyright music whilst streaming, so I've had to stick rap in my ears. So apologies for that. So that's why if I randomly start rapping, that's the reason being. So Axcrypt has passed his evaluation this morning on what we were talking about on YouTube, which is amazing. Another one. Another one inside Red Pill who's passed their evaluation. The list continues to grow. And there we go. There we go, ladies and gentlemen. We're now back inside a breaker, right? So this is a breaker block. So this is obviously a key level. For me, I'd like... Burn, baby, burn. So far, have we picked every single direction of every swing high and every swing low? Tell me if I'm wrong. Tell me if I'm wrong. No doubt Chris, if he wasn't banned, he would have an opinion. He would say, I'm lucky, I'm fluking it. Every day, without fail, we do this. So the low of this breaker is a potential long, albeit I would still want to see the lows get taken. I want to see a bit of a meltdown. I want to see us get into this order block on the 15. That's what I'm looking for, guys. That's what I'm looking for. But we are inside a breaker. Breaker block. It is a potential long off that breaker, albeit I'm not taking it. It's too high risk for me. It's too high risk. Morning, Flavio. How you doing, bro? The silent killer. The silent assassin is Flavio. Doesn't say a word. But diligently always turns up. Always puts in the hard work. So for those of you who are... The reason why I didn't take this breaker is I'm also short. So for those of you who are inside Red Pill and you go into study entries, this is the classic breaker block underneath engineered liquidity. Breaker block underneath engineered liquidity. I do trade the 2022 model, yes. Good morning, Mad Kid, Mad Scotty. Welcome in, Scotty. Scotty Too Hotty. That was my favourite wrestler back in the day. Scotty Too Hotty. It's showing my age a little bit there, isn't it? But do you remember the worm? Anyone remember the worm? That was the shizness. the heyday of wrestling. When you get Scotty the Hottie doing a backflip off the old corner and then flipping into the worm. That's when it was good. That's when it was fun. That's when it was fun to watch. But welcome in, guys. Lots of new faces have joined over the weekend, which is awesome. Take your time to get used to the server. Make sure you introduce yourself, guys. Make sure you introduce yourself if you join, so everybody can get to know one another. So inside of the introduce yourself channel, just put a little note inside there so everyone gets to know one another. That'd be awesome. What on earth is that noise? Wise Trader. That's a cool name. It's a cool name, Wise Trader. Yeah, no worries, broski. We've just been, we talked a lot today about engineered liquidity, directional draws and liquidity, current price targets for today, smart money techniques, so SMT divergencies on the SMT. We talked quite a lot, but ultimately you've got my daily bias in there as well. So there's a lot in today's session on YouTube. I might start doing this more often, because I have a real estate business, so I normally do that during the London session. But I'm pretty tied up. That stuff's being taken care of. So I had a free morning this morning, so I jumped on YouTube. But I might start doing it more frequently, where I just jump on during the London session on YouTube, and then for 8:30 onwards, I'll be back inside Red Pill. And then on Friday PM session, I usually jump on YouTube as well. So almost like bookending the week, the start and the end. But yeah, this is the classic breaker block underneath engineered liquidity. So for those of you who have studied that inside of the Red Pill University, that was your potential to go long. I went short. I tested a short there. So again, that was just another short which I took. Didn't materialize to anything. Stopped me out in profit. It could still potentially run to my target, but I didn't want to hang around. So that's the trade I just took. So in order, this is my first trade of the day. So I was in at 54.75, drove it down to 51. And then my runner took me out for 52. I was looking for 49. Then I was looking to get short here at 54.50, and it fell short of 54.25. So I missed that. Was looking for the order block entry inside the 15-minute order block. So I was looking at the 15-minute OB. I wanted to purge these res equal lows, dip into this OB. Consequential encroachment was 49. That's what I was looking at. And it didn't give it to me, so it took me out of my runner. And then my other trade is 54.50. So I finally got my 54.50. I thought I'd try it just to try and run back down to that OB. But naturally, we have a breaker block which sits just below. So I didn't want to leave my stops above my entry point, because obviously we had a key position to go long, which is where I sometimes go long. If, for example, this had been purged. If this had been purged and we'd got up here and we'd done all of this, I would 100% gone long here. But because I'm still wanting to see everybody who is net long here get taken out, or at least be pressured, I didn't want to I didn't want to take this long, so I was net short. But it was always a potential that price could run off this breaker because it is an entry model of mine, right? A breaker block underneath engineered liquidity. So that's why I trailed my stop there. So pretty much a flat trade. Got one contract, couple of contracts for a couple of handles. Nothing much. Nothing exciting. But if price had melted, then I would have got my trade down to the 15-minute order block. Could still get there, but not prepared to run the risk. Morning, Scotty. Good morning, Scotty. Oh, you're in YouTube as well. This is too many screens. If you've got any questions, feel free to drop them in the chat, guys. I'm more than happy to answer them. Back inside the 15-minute volume imbalance, right? We've got another one up here, actually, that's now formed. Oh, which has just been pinged. If that's still there by the open, I mean, geez Louise. Geez Louise, what more do you need? What more do you need? There's a halfway crooks. There's just there. So I'm on a lot earlier than usual. I'm normally on about 8:30 covering the day's session, but I thought I'd jump on slightly early today because I'm not needed elsewhere today. Anyway, I hope you had good weekends with your mothers. I hope your mothers love you again. I hope your mum told you were the best son in the world and that you can achieve anything you want to achieve. You know, that usual spiel. Give you some motivation for the week, right? You can be anything you want, son. The world is your oyster. You're so young. The world you have ahead of you is so big. You know, all of that chat. So I hope you feel fresh if you spend time with your family, with your mum especially. I hope you managed to get your mum a card and didn't forget to get your mum a card, like my friend. What a douche. What a douche. What a douchey douche. Boom, 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 boom. X putting in overtime. I don't know if it's possible. I'm sort of 18-hour days. I do 18-hour days. If I did any more, I think I'd just wilt away. This will be interesting to keep an eye on, right? If price gets down here and wicks into this BISI but holds the breaker, that'll give me an indication that price might not want to come and take the lows. You know, if price runs into this BISI here, you know, because this displacement leg, you know, inside the OT of this displacement leg is the low of this SIBI on the hourly, and it's also the lower quadrant of this order block on the hourly. So I'll be looking to see how this BISI is respected. If prices runs down there and hits that and bounces off, or if it crashes through. If it crashes through, I'll be looking at the 15-minute order block. Right, 2 seconds, guys. Just need the toilet. Yes, you crack me up, yes. I'm going to run out of vape juice today. It's going to be savage. I forgot to get some earlier. You're going to get Grumpy X. All right, that's what's going to happen. Is that level slapping or is that level slapping? 54.50, I said, is the last line for price to run down for a safe entry. Did I or did I not say that about 2 hours ago? Scraps, you're supposed to be on mod, bro. You should know how to do a Twitter post. How's it going, 10? How's it going, June? Morning, June. Morning, Futures X. Morning, Drysdale. Good morning, Drysdale. There's lots of new faces over the weekend. So, guys, if you are new, it'd be nice if you could drop a little something about yourself in the introduction channel, just so we know a little bit about you, where you're at in your journey. You know, are you experienced? Are you not experienced? It all helps us to get to know one another, which is the name of the game, right? And so we can all help one another and know where you are and help guide you in your journey, all right? So if you are new, drop something in the introduction. Otherwise, you're just going to sit there in silence, and that's kind of weird. It's kind of creepy, right? It's kind of creepy. Right? It's kind of creepy. Just sat there in silence, staring, not speaking. Like a voyeur. You a voyeur? Or are you looking to engage? Are you looking to learn? Are you looking to be part of a community that is driving for greater good and driving for success? Which is it? Hope it's the latter. I hope it's the latter. So I'm currently on both YouTube and Discord at the moment. I will be dropping off YouTube very, very shortly and just focusing solely on Red Pill for the Open. But we are looking at this breaker block. For me, I do want to get a safer entry down into this 15-minute OB. Oh, blimey, there she goes. What did I say? What did I say about that Bissy? Guys, that is a dumpy dump, isn't it? We've got news. Someone tell if we got news. right? Talk about shakeout. Talk about shakeout. Jesus. Jeez Louise. Ran up into the BPR that we have up here as well. Lovely jubbly. Lovely stuff. Did I say, look at this Bissy and see if price wicks into it and respects it? Respects the breaker. Wasn't expecting it to happen that rapidly, but was half anticipating it. Oh yeah, it's the old Feddy. It's the old Federoos. The Fed speakers aren't speaking until after 8:30 though, bro. $15-minute volume imbalance, currently acting as resistance. Back into the breaker. Stuck between a breaker and 15-minute volume imbalance. This is engineering liquidity, guys. This is when you just stay the fuck out. The market is pretty optimistic about how it will react to our policy, Fed's boss stick. Great. Whatever that means. Whatever that means. Whatever that garbage means. Whatever that garbage means. Looks like they're going to keep us here for the data. Looks like they're going to keep us here for the data. Galaxy, can we not post that sort of crap in the lobby, please, buddy? Got absolutely no interest in that stuff being in the lobby. It's just confusing crap. Sorry, Galaxy. See if price wants to expand higher up into that mid block, or if it just wants to consolidate here. Yeah, don't follow that sort of news, Galaxy. You just want to focus on the news events and have your own have a daily bias formed. You don't want to be listening to fucking noise. That's just noise. So I did go. I did. You know, take a long when I said I'd be looking to see how price respects a certain level. I'm keeping very, very tight stops. You know, it's because we are inside of consolidation, right? But where I was looking, that BISI inside of the OTE as a for it to wick into but respect the breaker. When I was talking about that, I placed an entry at the low of that SIBI. What did price hit to a tick? That SIBI. Right. So I want to see if price wants to expand higher up to 59, or I'll just cut it loose. I don't mind. You know, ICT talks about this a lot, you know, getting a feel for the market, just dipping your toe in, you know, you just get a feel to see what's going on. So that's exactly what I'm doing. You know, it's just a toe in the market. It's a level where I was expecting price to reach into, to expand away from. And if price is aggressive and it wants to run, then I'm in the trade. But if it wants to, you know, mess around and consolidate, then it will take me out for 2 handles on whatever it is. So either way, it's a win-win. But I'm making sure that when I am entering, I'm not entering inside of essentially I'm not becoming engineered liquidity. I'm entering where smart money will be entering if they were to enter. And this is literally bottom ticking that data wick. No, I'm sorry, Gene. I just don't want that stuff being posted. You know, it's just. I'm assuming that was a joke. Guys, I'm like, you really, you know, whether you want to take my advice or not, like, you waste so much time on that sort of crap, like listening to other people's Twitter feeds and who have a quote unquote platform, right, to preach from, right? Like the people like Jim Cramer, you don't know who is in their back pocket. You don't know who's paying them to say certain things. Never rely on someone else's opinion to make your own market judgments. It's it's stupidity, right? You have no idea how corrupt the world is if you're believing other people's opinions. Like, it doesn't take much for them to be told to say something and get 200k cash put into an offshore account. Like, and I'm not saying that that's happening, but it could happen. And if it can happen, then why allow it to be a factor in your outcome? Like, all you need to know and all you need to be aware of is these candles on this chart. What are these candles saying and what are they representing? Because nobody can tell me that that's not a green candle and nobody can tell me that that's not a red candle. But Jim Cramer can tell me that the market's going up, and Joe Bloggs can tell me the market's going down, right? Do I believe them? No, because they can say whatever they want to say. This market this candle cannot not be red. You see this as red, I see this as red, market makers see this as red, we all see this candle as red. And so that is all that matters, is what is on this chart, what is being printed candle by candle. That is all I care about. And then all you're looking at is draws and liquidity and where is price drawing to. I could not give 2 hoots about someone's opinion based on a Fed speaker's comment. Fed speakers are as manipulative and fraudulent as they come. And then you've got someone like Jim Cramer commenting on someone who's already fraudulent. I mean, you're just compounding bullshit upon bullshit. Like, Jerome Powell's job is to manipulate the market. His job is to manufacture a soft landing so we don't fall into a massive recession like we have in the years gone by. He is manipulating data. Everyone around him is manipulating data. All of these months running up into this, it's been good news combined with bad news. It's bollocks, right? All it's doing is creating this fluctuation so we stay in consolidation, right? That's the only thing that is coming out of it. right? So we have high unemployment, yet we have more people getting jobs. I mean, it's continuously conflicting arguments to cause confusion and create the soft landing that they're intending for, because this recession, mini recession, isn't a factor of economic instability. It's caused by external factors, namely COVID, and then compounded by the war in Russia, right? So they know that the market is strong, they know that the sectors are strong, and they just want to manipulate a situation because we have mass inflation caused by pressures in supply chains developed by the war in Russia and COVID, that we're still delivering from COVID. That is the issue. So they're just trying to manipulate shit to get us through that window, and hopefully a solution is found in Russia and we can get out the other side and the price moves forward. Whatever you do, don't believe the bollocks that is coming out in these Fed speeches and these data releases. And then also don't compound that by listening to some garbage on Twitter that is being promoted to incentivize people into believing market is going a certain direction. It is absolute lunacy to even contemplating using that as your formation for, you know, using directional bias on the day. If you are so reliant that you need someone like Tim Cramer to decide whether you go buy short or go long, you need more work. You need to study more, because all you need to learn is what's in the charts, and you can answer that question yourself. You don't need some pumped up joker who's funded and is fraudulent as F to make your decisions for you, right? Please don't fall into that trap. You'll waste so much time, so much money, so much effort. You'll confuse yourself because you'll be going, well, I see this is long. Everything I know and everything I've learned about picking draws and liquidity and entering and exiting positions says I should be going long. Yet some dude called Tim Cramer says I should be going short. So I'm going to go short just because he's got 1 million followers. What? What are you doing? Like, what are you doing? Like, if you are doing that, stop. Stop right now. Like, you have the power and you have the knowledge to make the decisions for yourself. And I know you do, because I've seen you take trades. A lot of you, I've seen you execute good trades. So you know how to do it. So why do you need someone like Tim Cramer to tell you what to do? It's stupid. So that took me out for those two handles. Little foot in the market, little test in the market. If it wanted to go, it would have gone. I was in it. If it stopped me out, I get my two handle profit. Here's what it is. But ultimately, I'm still looking at that 15-minute order block. 15-minute OB is here. I want to see us dip into this, take out all this liquidity to move price higher, dipping into this bissy on the hourly, the upper quadrant, around 49, that sort of area, to go long. I don't want to see it start crashing through that bissy, if I'm honest. I want to see price expand away. This is all tying into what I was saying last week in terms of accumulating inside of the balanced price range, right? How long did we stay inside BPR? These yellow lines indicate the BPR on the daily, right? Accumulate, move higher, back into it, accumulate, move higher, back into it, accumulate, move higher. What we're anticipating when price breaks out is to move higher, right? We've taken out the sell side down here. We ran the sell side, so what's price going to go and do? It's going to go run and take liquidity and inefficiencies in price on a higher time frame. Right, we've ran into OTE of this displacement leg, but what price has no need for me to run into a deeper discount. If price is going to expand higher, it's going to expand higher. So it's going to take out these pools of liquidity. We can combine that with being above equilibrium of this premium range, so price is more likely to go and tackle the buy side. right? We also have support of the new weekly opening gap. So if it fails this level, what do we have at 46? So anywhere between 49 and 46. 49 and 46 is that 15-minute OB. I don't see it having a need to run all the way back down here. You know, if we're going to expand higher, you know, we spent, you know, this day, all in this BPR. And as you know, inside of my broadening formation, I'm looking for BPR to be respected as support. Well, it's been respecting. I mean, look at how these candles are respecting this BPR. All right, wicks do the damage, body tells the story every time we wick into this BPR. So I'm expecting price to expand higher, to come tackle the Thursday, Friday highs. I'm looking at 72 as a price target. Why 72X? Because we can start looking at confluences, right? This on the hourly, expanded higher, 2 times standard deviation is 72, right? What else do we have at 72? The low of this new weekly opening gap. Where do we find ourselves at the moment? Hovering around the RTH gap for this time last Monday's open. Where did we open, by the way? Close. We close at 33. Closed at 34. We closed at 34. Okay, so we're going to gap up. $77. We also have this RTH gap up here as well. So if we look at this daily chart, we have the weekly wick. This is the previous weekly wick, which is this is what these white lines are. So this is the previous weekly wick. We ran down into the upper quadrant of this weekly wick, right? So if we just quickly look at this very, very briefly, put the quad fib on it. So 25%, the upper quadrant to a tick, right? That is a sign of bullishness, right? Upper, you know, when we use wicks, if we're bullish, we're looking for the upper quadrant because that's a sign of bullishness if it's respected. If we're bearish, we're looking for the lower quadrant, right? So we've dipped the lower quadrant, then the lower quadrant of the previous week. I'm expecting price to drive higher because this order block was filled in twice, filled in this BISI, this candle took this sell side, this last week ran into this week's CE, this is now run into 25%, which is a bullish sign. So I'm expecting price to expand higher. So that's what those white lines are, 25% to 25%. 72 is also this high of this candle. So this is the Wednesday high, right? So I'm expecting price to expand higher to come and tackle these. So Thursday and Friday for me are low-hanging fruit objectives. That's what I'm after. And if it wants to keep punching on beyond that, great. So for me, it's a case of just looking for low risk entries to go long. But this OB, so these white lines, we have this bullish order block on the hourly, and we're hovering around the lower quadrant of that OB. For me, still, I'd want to see price dip in and take the lows. Because you can see, so we discussed this, and we discussed this SMT in the build-up, so I'm not going to go through it all again. Yeah, we discussed it all in this morning's London session. But you've now got an NQ taking the lows, and we have ES and YM which haven't. So yes, you could say NQ has taken the lows on behalf of these two, but for me, I'd want to see, if we're going to expand higher, I'd want to see them all in confluence before we do that. So for me, I want to see these lows get tagged before we move higher. It could move higher from here, but for me, it's not a low enough risk entry to go long. Right, 1 second, guys. If you have any questions, feel free to drop them in the chat. Right, YouTube, that's going to be it for me. I'm going to wrap up here. I'm going to jump into Inside Bread Pill. So I hope you found this morning session useful. And yeah, that's all I've got to say. So until next time, trade safe, trade smart. And if you're going to trade today, good luck. You know what I'm personally looking for now. But I'll catch you all very, very soon. Take care. Bye.